Welcome, traders, to another Tickmill trading update with me, Patrick Manley. Want to update the S&P 500 view using the Emini futures contract and put together a trade plan for the week ahead, looking at some high probability action areas and some price objectives that we can realistically target for this week. So, as always, before we jump into the charts, just want to update where we are in terms of the market dynamic. And we had Trump basically pulling a taco on Friday and walking back the threats with respect to tariffs and China. And that saw the market stage an impressive recovery on Friday. Now coming into this week, we obviously saw at the end, like I say, that rally on Friday, which actually saw us finish up on the week 1.7%, taking back a lot of that obviously on Friday. Utilities, though, the XLU sector finished the week with a new all-time high, and all sectors managed to close positively for the week. The S&P 500 slightly down on the month to date, negative 0.4%, but for the year we are trading up 13.3% and currently sitting just 1.5% away from all-time highs set earlier this month. The week finished as an inside week, so in terms of range, that is maintained at about 200 points heading into the last 2 weeks of this trading month. So we're looking about another 50 to 100 points either side of current market pricing would be a reasonable expectation for the October trading range. So that would give us roughly 65.50 to 67.64, or lower still with that 100-point range, 64.50, 65.50 as the low for October. And then on the upside, we'd be looking at 68.15, 68.65 as the potential implied volatility range resistance for the next couple of weeks. With Friday's close, the entire week rebalanced, obviously with the liquidation, and from the Friday prior, we stayed within that range all week. So we have 8-day, 21-day, all EMAs all within 10 points of each other, so we can sense that volatility with Friday's finish being sucked out of the market there. The In terms of where we are from a structure perspective, the monthly remains one time framing higher. 63.71 would negate that to the downside. In terms of the weekly market structure, we are balanced 65.91, 68.09. Again, those are the reference points for the weekly balance zone, which is pretty much that range from the prior Friday's liquidation. And then in terms of the daily market structure, 65.93, 67.66. In terms of the expectations now with range for the end of month, like I say, 66.02 on the downside for the end of month straddle for October, 68.91 on the top side. November monthly options expiration currently pricing 68.91 on the upside, 63.99 on the downside, and we still have December then pricing out 63.03, 70.25, and the setup coming into this week, again with respect to the calendar, is obviously impeded by the government shutdown in the US. So we're a little bit light on data again. We do get earnings Tuesday, Netflix and Texas Instruments, and then on Wednesday we will hear from Tesla and IBM. I will be sending out a video update with respect to the Tesla earnings, what to expect, and potential trading opportunities around that. We should potentially see existing home sales initial jobless claims on Thursday. One print we are going to get this week is CPI, and that's going to be released on Friday, along with University of Michigan consumer final print there. So it's going to be again light on data, with the focus, I guess, is really going to shift to these tech earnings, Netflix and Tesla, are going to probably drive the action as we head into the this week. In terms of the breadth of the market breadth has improved. The stocks over their 20-day moving averages and stocks over their 50-day moving averages are below 50% still, so caution is warranted, but they are up from prior week's prints. So the 20-day currently 40%, last week 28%, 50-day 44%, last week 36%, the 200-day 58% up from 54%. So that's that print just keeps things away from turning fully bullish, but there is obviously continued support under the market, and as per Friday's move, that support looks to be maintained as we open the week here. In terms of gamma, it's a neutral read heading into the week between 200 plus or minus 200. Not much for dealers to do past options expiration on Friday, obviously, which we've been through now. So we need to monitor to see which direction the gamma builds in as we go through this week. And then in terms of the price action, so moving to the charts here, we have on the daily time frame, as of Friday's close, we actually closed above the 5 period volume weighted average price. So 66.93 is the level to watch there. And again, on the weekly, we managed to recover after the prior week where we actually flipped negative. Again, with the close on Friday, we've got a bullish print there, 66.93. So those are the level, 66.95 on the weekly, 66.93 on the daily. So you can see they're coalesced around that just below the current market. We're trading 67.20s. So if we look to the intraday time frame and talk about where we see the opportunities as we start the week out, I'm going to be using this 66.85 to 66.75 as the weekly bull bear zone. Just below there, we have the volume weighted average price close from Friday, which is also going to be a key area to keep an eye on. So what I've been looking for initially as we start out the week will be any pullbacks into that area. Watch for bullish reversal patterns there to engage on the long side. We're going to look to once again target and see how we trade around the 78.6% retracement of that those Trump comment liquidation that we saw in the prior week. So back up testing into this 67.55, 67.60. What we really want to see on the bullish side of things is closes above here would then set up the potential for a grind higher to retest prior all-time highs. First of all, we have to close the gap that remains unfilled from that prior week. So 67.80 is going to be a key area. But if we can get some acceptance there, then we're going to look to target prior cycle highs through that 68.13 area. And the weekly projected straddle, so implied volatility resistance, comes in this week at 68.39. So that's going to be our ultimate upside objective on the bullish side of things. The bearish scenario would be that we don't find support into the weekly bull bear zone and trade lower to retest the support areas to the downside just below 6600. Now, if we lose that 6600, the implied volatility support zone actually comes in at 65.60. So again, if we do get a test into there, certainly into the back end of the week, I'd be watching for potential bullish reversal patterns there, and maybe we put in another inside week and just continue to consolidate until we see some reconciliation with respect to the China tariff situation, or if we get any earnings surprises. I think those are the things that are likely to move us out of this range at the moment. But for now, I think we look for another potential inside week with a bullish slant to it. At this stage, I'm leaning to the upside, looking for retest prior highs and onto that weekly projected range resistance. I would note, though, from a seasonality perspective, this week, specifically in October, over the last 100 years, I think is the time frame there, that this is the weakest equity performance of the year. So something to just keep in mind there. But again, I don't trade specifically off seasonality. It's something I factor into things. But whilst we're holding the weekly bull bear zone, my focus remains to the upside for now. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.